Thanks so much for your company for this weekly wrap. My name is Jessica Ramir. I'm a market analyst at Bell Direct. Well, let's start off by going around the world in 60 seconds. Global equities fell 14% in March, 22% in the quarter, as COVID-19 cases continue to grow in most parts of the world. All 50 countries in the index saw their stock markets fall in the month of March and in the quarter. In Australia, we lost 25% in March. The US losing 14, while more resilient parts of the world included Japan down 6.8, China down 6.6, Switzerland only losing 4.7, Denmark down 5.8. So what does that mean? Well, when building your investment portfolio, you might like to consider not just putting all your investment eggs in the Australian basket so that you can possibly capture some of this outperformance and upside by taking advantage of different economic cycles around the world. And a simple, easy way to do this is by investing in exchange-traded funds. Now, in terms of the key investment themes across the world's 1,200 sectors, the hunt for healthcare and consumer staples continued as these outperformed, followed by information technology stocks. The worst performer remained energy, affected by the rout of the oil price decline, but it has somewhat bounced back over the last couple of days, but not enough to get out of bear territory. Following oil lower was financials. Now, in Australia, we've been talking about this for a while now. Non-cyclicals, defensive, conservative sectors continue to outperform, and they'll continue to outperform until the economy bounces back. And that's why year to date, our healthcare sector is up the most, 4.2%, staples following a close second. Energy stocks down the most on the ASX, 45%. And this week, the ASX 200 had its best week in a year, up 6.4%. That's from Monday to Thursday, helped by the $13 billion wage subsidy announced by Scott Morrison. Also, the fact that there is less selling as people are no longer needing to top up their margin loans or cover their margin loans. So now on a year-to-date basis, where are we? Well, we're sitting with a loss of 23%, remembering last year we gained over 18%. But the same stocks that continue to build momentum or lose momentum remain centre stage year to date. Fisher & Paykel up 40%. Cloud service provider NextDC in a close second. Southern Cross Media continues its fall. It's down 80%. Now, a big thank you to those of you who took part in our survey this week, revealing what your strategy is amid this current climate. The majority of you said that you're buying undervalued stocks, and that's what we've seen in the market, while 24% of you said that you're waiting for the bottom. With that in mind, here's an economic update and some stock tips from Goldman Sachs. Well, Goldman Sachs says given many governments around the world, particularly in the United States, here in Australia and New Zealand, are now focusing on the strategy of elongating the curve to slow the rate of viral contagion, you can expect the duration of this economic downturn to elongate as well, and assume that we'll have a U-shaped recovery across economies, commodities, and industries. And across Goldman Sachs coverage, because of this, they've upgraded Brambles BXB to a high conviction buy, given it's benefiting from stockpiling. It's got ample money in its kitty, $800 million US to be exact in cash, and $1.6 billion in undrawn facilities. And it's also well placed to continue to expand its expansion plans as well. It's also forecast to pay that 30-cent share dividend this year. That's a 3% yield. Horizon AZJ was upgraded to a buy by Goldman Sachs, saying despite the overwhelming exposure to Australian coal exports, it's got a highly defensive earnings profile, and it's been relatively unaffected by COVID-19, despite some heavy selling. Goldman Sachs expects AZJ to declare a dividend this year of 26 cents per share, and that implies a forward yield of 7%. Moving to UBS now, IDP Education upgraded to a buy from a sell. Yesterday reported that IDP Education, or IEL, was one of the best performers on the ASX after it rose 27% as the overseas student placement firm raised $225 million in capital, a lot more than the $175 million plan, and raising this at a price of $10.65. IDP says A capital will ensure that it can navigate through this current period of COVID-19 volatility. All in all, UBS is targeting a price target for IDP of $13.95. Morgan Stanley more bullish, a price target of $17.50, and on Thursday it closed at $14.75. CSL was reiterated as a buy by UBS, citing immunoglobulin or IG volumes have grown 13% year on year on a rolling period, and that's significantly higher than the same time last year's 3% growth. And now leaving you with something to consider. Remember last week we spoke about how and why quality companies outperform. Remembering a quality company is a company that's got low debt, high repeatable cash flows, and often has a high return on equity. These can be found in ASX companies and also in the ETF landscape as well. And you can see on the screen from the chart that the dotted line indicates quality stocks around the world, excluding Australia. And this is showing that quality stocks have outperformed the world's share market. Now, staying in ETFs, I use BellDirect's ETF filter to search for listed products that had outperformed. I clicked on performance, and what you're seeing on the screen are the top 5 performers. You can see the gold ETF called Perth Mint Gold, PN Gold, is up 37%. As people also flock to investing in the most liquid of all liquid currencies, the US dollar. The BetaShares strong US dollar ETF Yank is up 32%. So there's 2 ETFs to consider. Also, plenty of stock ideas for your portfolio for 2020. Don't forget to tune in to our market update each and every day that the market is open. Thank you so much for your company for the weekly update. From all of us here at BellDirect, stay safe, take care, and happy trading.